I think a lot of the bad examples of entrepreneurship in China come from really short-term thinking, such as copying people's copyrights and brand. Of course, it's illegal, but aside from the illegality of it, of course, that's the easiest thing. You take something that is very successful that someone else has created, and you literally copy it, and you can sell it right away. So if it weren't for the legal aspect, and I'm not making a judgment on that, every country has a right to think about its own intellectual property. That's the rawest form of entrepreneurship, which says, I see an opportunity, meaning I see a market demand. I have an easy, quick way to bring in the resources I need, raw materials I need. I can produce it very quickly at low cost, and I can sell it, and I can make money. And the sooner the better. And that last statement is really what has been holding back investors, so-called venture capital investors or other investors in China and Asia. They're so accustomed to that when an entrepreneur presents a plan to an investor, that's the first thing they look for. Oh, 6 months, you haven't made any money? Forget you. It's not so. Entrepreneurs, even the ones who are more ambitious technically or technologically, have a huge disincentive to try to create products that have long-term focus and may not have a result for a couple of years. That will not fly.
Hello, welcome to Tiny Dragon, where we dive deep into tech startups mastering product market fit, even in the most unfamiliar markets. I'm your host, Elaine. Join us as we dive deep into the heart of tech startups, uncovering the secrets of how tech startups found their product market fit, turning complex insights into actionable strategies for entrepreneurs and tech enthusiasts alike. Okay, welcome to Tiny Dragon. So today we have a special guest, Pochi Wu, Professor Pochi Wu. He is currently the venture advisor of SkyDeck, which is an accelerator incubator of UC Berkeley. Thank you, Pochi. Thank you. And why don't you give us a little bit more detail about your background, because you have so many years of experience in the venture world and tech startup. It's a really long list, right?
Okay, thank you for the kind invitation, Elaine. You and I have known each other for, I don't know, a decade, probably longer at this point. The short version of my bio is that I was trained as a scientist, so I have a PhD in biochemistry, molecular biology, spent about 2 decades as a venture capitalist here in Silicon Valley, as well as in Greater China. So that's mainland China, Taiwan, and a bit of Southeast Asia as well, and a little bit in Hong Kong. And then about a decade on the startup side, not as a founder, but just working with friends really who are starting companies. And then a decade teaching entrepreneurship at the university level. Again, starting in mainland China, Peking University, 7 years at Hong Kong University of Science and Technology, and 1 year here at UC Berkeley. And then since then, I've been an advisor, one of 750 advisors now at SkyDeck, which is completely voluntary, for the last 6 years.
Awesome. Okay. Yeah.
Let me just tie all that up in a tagline. I would call myself an investor in human capital. So basically, smart people, smart ideas. And
awesome.
I'm doing that in the ecosystems in Asia, and again, in Greater China, Hong Kong, Taiwan, Southeast Asia, as well as here in Silicon Valley.
Awesome. So I guess you've met many entrepreneurs, good ones and bad ones, right? Yeah, in our show, we are especially interested in those with a cross-cultural background, people like yourself. You're educated, you have educated in the West, but you also have Chinese cultural roots, and then you go back and forth between the continents, right? So what made you get into venture capital?
Yeah. Without going too far back into my background, even before I completed my PhD, I really didn't want to have a career as an academic scientist. I love science, I love technology, but I always wanted to be involved with something that was more of practical significance to society. At the time, I never thought about engineering, so I never did anything there. And when I started getting involved with early stage companies, which was an outgrowth of the work I was doing after my PhD, I discovered that this was the kind of ecosystem. This is the kind of people, not any one particular category, all the different stakeholders in the startup ecosystem. I discovered this was an ecosystem that I really thrived in. It would stimulate me, it challenged me. The people I met were really interesting. Of course, very diverse, all kinds. And eventually, one of the company I was working with had hired me as a VP of R&D. And I was in the position of managing projects for which I was trying to raise capital. And so in that context, I met some investors. And very quickly, I figured out it's better to be on that side of the table, right? We have projects looking for money. And so it was a pretty easy transition in terms of mindset. It was not an easy transition in terms of actually working and developing funds and so on. That's another story.
So in terms of the investments that you do, is there certain verticals? I know SkyDeck has it's like deep tech, right? Is it commercializing yeah.
It's IT, communications, software, chip development, as well as in the biotech area, in medical devices. And this has been actually my history. So despite my PhD in a biotechnology field, I did not want to be so specialized. And that, again, another story. So I was always more of a generalist. And I think, first of all, I enjoy that. I don't think that being a generalist is not a disadvantage. Now, for a young person starting out today, you have to have some expertise. You can't just say, I'm interested in everything. People just laugh at you. They laughed at me then too, but it's worse now. But at this point, what I bring is indeed experience, perspective. Of course, the cross-border thing really is very helpful because it's not so much that things that work in one country may or may not work in another country. It's more that you have to look at all the assumptions you make about the market, about the customers, about how your product is going to work in the context of the businesses in those different countries. And you don't think about those questions if you just say, I'm just this American company, I want to serve the American or North American market. I know who all these people, I don't have to question a lot of very fundamental assumptions. And that's actually a flaw. You think that's efficient, but it's a flaw because it makes it very difficult for you then to bring your products to other markets. American companies trying to sell into Asia and Asian companies, particularly Chinese companies, trying to sell into the US.
So what's the biggest difference between a North American culture and going to Asia markets and you've trained a lot of people? What are some of the interesting stories or war stories that you can share?
There's so many different aspects. One I always start with is education. We're all with the stereotype of the tiger mom, the Asian mom, who pretty much beats their children, maybe not physically, into excelling in academic subjects. There's in general much greater emphasis on the skills that are required to excel in the academic environment, whether it's China, Japan, Southeast Asia, and so on. That's good. These are very smart people. They've accumulated a lot of knowledge. They can perform very well in that context. However, the fact that they actually excel in that often means that they are unable, or it's much more challenging for them to cross over to the entrepreneurial mindset, which requires a totally different approach to what you know, what you don't know, how you meet challenges. What do you do when, and this is literally the dilemma for all entrepreneurs, every day you have to make decisions on incomplete information. You never know enough, right? In school, it's different. In school, in a particular class, to pass the final exam, you are going to be given all the information you need, right? Of course, you have to work with it, but you don't have to extend beyond that. So you learn linear thinking. And in the entrepreneurial world, linear thinking is deadly. It's literally a fatal flaw. You need this multidimensional, very flexible, very adaptable attitude, which actually allows you to, we'll call it bend some rules, or at least be more creative, think out of the box and those things. It's a critical survival skill. So that's always a starting point. So the entrepreneurs who come from Asia, whether we talk about the market side or not, just their approach, their mindset to how they think about their product or their customers, the sales process, etc., is very different from what an entrepreneurial mindset has to be. Now, in America, sometimes it's the other extreme. Sometimes, the ones, the young people who are most entrepreneurial often are not very good in school because they just can't be bothered. And then too wild, crazy ideas, and they push in a lot of directions, and they're hugely ambitious, often unrealistic, but they bring a lot of energy. They bring a tremendous amount of energy. Often they bring some insights into the market, which are actually very helpful. You can't get those, again, from the academic perspective because it's not in the books. You have to go out and talk to real people. So this is why a lot of American companies, even when the technology is inferior, often have more success, at least in the beginning, in terms of selling their products to customers, because they understand that American culture is much more, the marketing ideas are much more sophisticated. And it really takes a lot of not just courage. Courage is foundational for all entrepreneurship, but it takes more, the Jewish word is chutzpah. You just have to be almost rude, right? You have to be outgoing and so almost pushy in order to get people to listen to you and pay attention to you. So it's a more aggressive culture.
Yeah, I remember reading May Musk's book, like Elon Musk's mom's book, about how she raised her children, and it's complete opposite of how Asian parents raise their children, right? Letting the kid have their own responsibility and not doing everything for them. Yeah. So what's the North American way of raising kids that Asian parents are not aware?
You gave the perfect example. When we talk about teaching fundamental concepts in entrepreneurship, we often talk about what at least the young people in America used to do, which is you have to go and mow your neighbor's lawn or do odd chores for people, or even just working part-time. So when I was young, my mother was very insistent that I should not be distracted by any of that. First of all, there was no need, but aside from the need, she felt that that was a terrible thing for me to put me in that environment, go work in a McDonald's.
Right.
You earn a little bit of money, but what is it really worth to you? Now, the American answer to that is what you learn is independence. What you learn is some work ethic, to be responsible to your employers, some discipline. All of these things are part of it. But it does also bring, obviously, a downside. And that's another fundamental concept in entrepreneurship that's very difficult, which is the idea of paradox. And I love this topic because I believe that there's so many aspects of the personal characteristics of an entrepreneur that are paradoxical, as well as pretty much anything you do. There's like a fine line between, like I mentioned, between being super aggressive and being high integrity or connecting with someone. If you're super pushy, then you're probably not connecting. You're just forcing yourself on someone. But if you're too empathetic, then you'll never make a sale because you'll into the insecurities or the uncertainties of the customer, and then they'll just say, okay, you're a nice guy, but I'm not going to buy from you.
Right.
So it's really interesting how all of these things, there's always at least this is part of what I do in my advising work, is really to show people that there are these different sides, the different aspects of what happens to people's minds and their psyche, their psychology, and their behavior. And navigating all this in the entrepreneurial world is really much more complicated. The Asian attitude is things should be more straightforward.
Right.
Somehow, and you don't have the same kind of paradox because you rationalize it all out. But in America and the US especially, we almost make it a badge of honor to have all of this complexity, because we want drama, we want attention, we want people to notice us. Elon Musk is really the perfect example. He's obviously a super smart guy in business, maybe finance, clearly brilliant as an engineer. What kind of a human being is he? How does he treat his employees? How does he think about what his businesses really do in terms of the people side, as well as how they make money? And then he does things like Twitter/X, and you wonder, what is he really trying to do with this? And sinking $42 billion. This is crazy. I don't care how brilliant you think you are or how much money you have. Why are you doing this? Why are you using your valuable resources, your assets, your intelligence to do something like this? Of course, I don't know him. I don't know. And I'm not really challenging. I just say from the outside, I can't make any sense out of that.
Yeah, I remember there was one interview, a talk between Elon Musk and Jack Ma, and I think Jack Ma didn't get why Elon Musk was interested in going to space. Yeah, and then it was just not on the same page. But in terms of like entrepreneurship in Asia, Asia is a big place, right? It's not like one place. But in general, there are also a lot of entrepreneurship, but maybe in a different way. I'm thinking maybe North America is more from 0 to 1, like from like a lot of the new inventions, right? ChatGPT now, right? But entrepreneurship in Asia, there are lots of family businesses and doing real estate and all that. It's still entrepreneurial, but maybe a different flavor of entrepreneurship. Any thoughts?
Well, yeah, first of all, what you said is certainly true. But most of what is, I can't remember what the statistics are, but it's easily 75–80% of the businesses in the United States are in fact small businesses. So they're family things, whether it's a restaurant or other kinds of mom and pop shops and so on. The technology sector and technology entrepreneurship is a very specific subset. And of course, for those of us who play in this circle, and for people like me, based in the San Francisco Bay Area, Silicon Valley, this is our world. But this is a very tiny piece of the world. There are a number of characteristics that make this area very special in the world. And there are other areas in the US and other countries as well, where there are these pockets of high tech or deep tech kinds of innovation. But China, let's just talk about China, because obviously that's the 800-pound gorilla or elephant, whatever. No, elephant would weigh another order. So 800-pound gorilla. 1.5 billion people, probably more than that now. There's every stripe of every kind of everything that's available. What they have lacked until maybe the last 20, maybe 30 years is the intellectual capital. Enough really smart people, the top rank research scientists and academic professors. That was lacking 30 years ago. And they've really grown that resource very rapidly. So there certainly is a lot of very innovative tech coming out of China. There is a slight difference in that the Chinese mindset, and again, this is a fundamental cultural characteristic, tends to be more practical, meaning I want to solve a problem today. I'm not looking to innovate something that is a lot of fun intellectually, and I don't know what it'll come out to be, such as like the original Google algorithm. It doesn't look like a business, doesn't look like anything. It looks like a research project, a PhD research project. But people are willing to pursue that here in the US. And then there are a whole bunch of other really clever people who think, oh, maybe this is a way we can make money from it, if not now, in the future. But the Chinese way is more grounded, more practical, more not really just short term. It's not necessarily short term. I think a lot of the bad examples of entrepreneurship in China come from really short term thinking, such as copying people's copyrights and brand. Of course, it's illegal, but aside from the illegality of it, of course, that's the easiest thing. You take something that is very successful that someone else has created, and you literally copy it, and you can sell it right away. So if it weren't for the legal aspect, and I'm not making a judgment on that, every country has a right to think about its own intellectual property. That's the rawest form of entrepreneurship, which says, I see an opportunity, meaning I see a market demand. I have an easy, quick way to bring in the resources I need, raw materials I need. I can produce it very quickly at low cost, and I can sell it, and I can make money. And the sooner the better. And that last statement is really what has been holding back investors, so-called venture capital investors or other investors in China and Asia. They're so accustomed to that when an entrepreneur presents a plan to an investor, that's the first thing they look for. Oh, 6 months, you haven't made any money? Forget you. It's not so. Entrepreneurs, even the ones who are more ambitious technically or technologically, have a huge disincentive to try to create products that have long-term focus and may not have a result for a couple of years. That will not fly. Whereas here in Silicon Valley, if it's the right kind of idea, people say, oh, wow, that's ambitious. We call it in SkyDeck, it's a moonshot. It's more the dream vision kind of thing. It's a lot of uncertainty and risk as to whether that can actually be achieved. But the initial investment, the very first few million, could be simply a way of showing, acknowledging, and appreciating the vision and the insights, and of course the character, fundamentally the character of the founding team, that they have both the background, but most importantly the drive, that ambition that will take them beyond what might rationally be expected. And that concept is not so common in China. We're more risk averse in Asia. So we say, okay, I want you to do as best you can, but I'm not going to expect you to do more than you can do. Whereas in the US, the idea is, I will reward you if you can stretch beyond what I think you can do, right? I will tell you, this is what you can, this is the way a corporate employer would deal with an employee too, especially one who's very talented. They would set them very high goals, and then they would say, I don't know if you can reach this, but if you can exceed this, all kinds of good things will follow.
Right.
And so it is very much driven that way, and that's a capitalist model, right? Figure out a way to make it pay in money and other ways, but it is the idea that if you can push and drive to achieve more, you'll be rewarded more.
I wonder if it's cultural, where because US is formed really from Europeans coming all the way over across the ocean to form a new country, right? Whereas in Asia, it's not a very venture outward kind of culture, right? Historically. And also there are recent wars where your parents would want you to save money and save rice and all that and don't do risky stuff, right?
Yeah, all of that certainly has some potential, has some relevance. I think a lot of people don't really think about that very much. In the historical part, 200 years ago, the world is so different. But there's an ongoing debate about what is the nature, let's call it, of the genetic predisposition to entrepreneurship. In other words, is entrepreneurship something that you're born with? You have to have certain genes, or is it really a series of learned skills? And personally, I think it is, in fact, a combination. It's not a very clear combination, and every individual entrepreneur probably has a different mix of whatever these genes and skills are. It's not like there's a standard set, and here it is, we could inject this into everybody. I don't believe that entrepreneurship is appropriate for everyone, because some people, many people, the majority of people, really, they just aren't ready for it. And that's not a criticism. It's just saying that whatever personal characteristics, personality they have, and again, this question of drive and energy, just simply physical energy, makes a huge difference. Some people can get by very well. I used to have a boss, he would get like 4 hours of sleep every night. He was just dynamo. He could continue working and doing all these things, and everyone else would be asleep. But that was his nature. And I'm sure there are a lot of people like that.
So what are the characteristics that you've observed on successful entrepreneurs that you would put money into the startup? Especially you train so many of them, right?
Yeah, that's, I get that question in a couple of other phrasings. entrepreneurs, the companies I'm advising are, of course, real startups registered in the US. Some of them are registered overseas. A majority of our startups now are actually from outside of the US, not just the companies. And some of them have had some financing already, but the ones that we accept into our accelerator program, we have a fund in which we use to invest in those companies as well. Very modest amount, $200,000 US. But the object of our so-called acceleration is to actually prepare them. We want to select those companies that within 6 to 9 months can present themselves to real venture capital firms and obtain significant investment, which means typically over $1 million in new equity funding. And so the big question everybody is asking is, okay, what makes a startup investable? Okay, why would what do we have to present from the startup side? What do we have to present so that an investor will want to invest? And of course, that includes the founders, the founding team, the key people, as well as the company and the business itself. So that question is so much more complicated than people realize until they've been through the process. Once they've been through the process, then they understand that, yeah, it's a very complex algorithm because there are so many variables. And the worst part of trying to understand this is the difficulty from the entrepreneurial perspective of acknowledging what the investor perspective is. So the investor perspective, so when I was wearing my venture capital hat, I would get hundreds of proposals a year, 600, 700. So let's just say it's 2 proposals a day. So at the end of the year, so 700 some proposals. If I get 2 proposals a day, and in those days, we actually had business plans. Remember those things? 20, 25 page. No longer a 15-slide deck. And the question is, how do I get through? Okay, so the first thing is my investment rate was like 0.5%. So I would have to go through statistically now. This is, of course, an illusion, right? Statistically, it would be like 200 proposals before I find one I want to invest in. And that's not uncommon. That's a very typical investment rate. And then there's another interesting statistic, which is, what was it? What was I trying to say? I've forgotten.
Small statistics to pick out the right people. Yeah.
What entrepreneurs don't understand, there's so many aspects of it they don't understand. So my first job is to use actually a process of elimination. Because I'm going to look for, if I'm only going to invest in such a small number. Oh, that's what I was going to say. The problem is, for me as an individual venture capital partner in a firm, how many investments a year can I make? And in my, that would be 2, 3, certainly not more than 4 in 1 year.
Okay.
And part of that was because when I invest, after I invest, I typically want to sit on the board of directors of the company I invest in. And then I have a very serious limit on the number of companies that I can actually look after. In board meetings, we have board meetings every month. So that's at least 1 day for the meeting day, and usually at least another day or 2 days, whether it's travel time or prep time. And then in between, you need to be talking to your companies. So how many companies can you actually actively handle?
Yeah.
Probably not more than a dozen at any given time. And then you're maxed out. You don't even have time to look for new investments. Okay. And they're just thinking you're sitting on this pile of money and you should be doing all these plans. No, that's not right. That's not what I'm trying to do. And so I have to go through a process of elimination. And one of the keys to elimination is, how do I spend the minimum amount of time to get through a large number of proposals so that I end up at any given time with a very small number of cases that I really want to spend time learning more about. And so there's a corollary here, which is that when a startup makes its first pitch to an investor, and that's very key, right? First impression is always key. when you make the first impression, if it's 3 minutes, 5 minutes, 10 minutes, whatever it is, the objective from the entrepreneur side should be, the only objective should be, can I get the attention of this investor and sufficient interest that he or she will invite me to have a follow-up meeting? That's the whole point. The pitch is only to the next step. However, most entrepreneurs, and the worst offenders in this direction are the really deep tech engineers, because they start
technical.
Yeah, they're too technical. They start off with a fundamental assumption, which is, how can you judge my project until you understand what I'm doing? So let me tell you, I want you to understand what I'm doing. I'll spend an hour telling you about my technique, why it's going to beat everybody in the world.
Right.
Guess what? I'm gone. I've checked out. I'm doing other things. I'm not going to give you an hour of my time to do that.
Mm-hmm.
So that's a really fundamental flaw. So it's very interesting, right? That what makes it investable is actually a serial process of screens.
Yeah.
That's the
They
first
need to know how to stand out, right?
Yeah.
Get your attention. Yeah.
Exactly. That's always the very first filter. You got to get my attention. The minute you lose my attention, it's over. You're gone. And then there are other issues. And I always tell the companies, the way this interaction goes, when entrepreneurs talk, they talk opportunity. But what investors hear, the same words, same story, what they hear is risk. Because they look at the world through risk-tinted glasses. So everything you tell me, everything you tell me about how great this technology is. Oh, I've got proprietary, I've got patents pending, I got all this stuff. Then automatically, my mind as an investor goes to, okay, how valuable is that IP? Who else has IP that might conflict with that? Or who has prior knowledge? There are a whole set of issues that come up. And I'm not listening to you anymore. I'm thinking about the risk. How big this market is, and what do I think? Okay, my question is, okay, how are you going to enter this market? Who's going to know? Who's going to care? How are you going to get the message out? And so on and so forth. And so entrepreneurs who don't understand this from the due diligence side, from the investor side, we call this peeling the onion. So the best approach for an entrepreneur is to present the information as if it were the successive layers of an onion that you peel, so that as you peel off the first layer, then the next layer looks really attractive, and then you peel that off, and then the next one's even more attractive, and so on. Instead of trying to throw everything out and saying, look, I've got this smorgasbord of 100 dishes, and you could be delighted. I say, what am I going to do with this, right? There's no theme, there's nothing. What am I going to start with? And probably I'll just pass. It's very interesting why that psychology just doesn't work.
Be user-centered. They have to be focused on what you want to hear at what time and when, right?
That's exactly right. And that's the point. We started out talking about product market fit. And I always think that term is backward, because it's not about product market fit. That suggests that you develop a product and then you market it. No, you have to, before you develop
market product fit. Yeah.
You have to understand the customer and the user to know really what is it that they want, what is their problem, what is the friction for them, what are they unhappy about, happy, as opposed to what can you do to make you happy about their problem. You couldn't care less.
Absolutely right. And there are so many tech startups that do that. They build the product, they engineer it, program it, and after months and months of burning cash, they haven't even found product market fit. Why is that? How is it? How are they educated to operate like this?
Oh, it's good students. No, it's very simple. They're good students and they love what they do. Okay. They're very smart. It's not a question of their ability. It's a question of focus. Their focus is on what they know, what they love, what they're interested in. So they just keep pushing that part of the technology. It's easy to push technology. The question is, how do you push technology to solve someone else's problem? See, they're solving their own problem. They're solving what problem they think they see. They assume that what they understand is the problem is in fact the real problem. But so often vast majority of the projects that I counsel have this problem, have this challenge, which is the the first thing is very evident in their pitch deck, right? We always say you have to have a problem slide followed by the solution slide. And the problem slide says, oh, we're going to solve the world's problem, take care of all the environment, blah, blah, blah stuff, right? The UN Sustainable Development Goals. And then they tell me, okay, here's our solution. We do X, da, 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 da. And there's no connection. Of course, eventually you can say there is, but they don't actually solve a specific problem. So I tell them that on your problem statement slide, you should have however many points you want to have, 1, 2, 3. But for each individual specific problem, you say, here is a specific solution for that specific problem. Then you have this thing, because first of all, when you say problem, that's your assumption that this is a problem of the market or of the customer and user. You better have validation of that. Show me that you really have identified the real problem. Now, then tell me about the solution to that specific problem. But instead, they think, oh, and there's so many interesting examples of this that I get from particularly undergraduate students, because I used to teach undergraduate classes as well as MBA, Master of Science in Engineering, but all entrepreneurship in classes that I personally designed. But these classes are all practical. They do what entrepreneurs do. They form teams, build projects, SkyDeck, demo day, the whole thing. Invariably, they like to, particularly because they're students, they say, oh, what kinds of problems do we as students have? So some of the favorite ones, you see this every semester.
Same ideas, right?
Housing, okay. Why do students have difficulty finding housing? And I'm sure that's universal, every country, every geography. And they think they can come up with a better model for how to basically match landlords or available spaces with students. And I tell them this is like a dating game. You should understand how dating apps work. First of all, these are all apps, right? So that's easy. But they bring no particular insight other than their own personal sense of need that, yeah, it's difficult to find housing. But of course, they don't have any solutions. They think the solution is somehow some kind of better matching. And that's usually not the answer. They think of it as a resource. And that's because they're young and don't know enough and not aware enough of resources or clever enough, whatever it is. They think that what is missing in this situation is that students are not well informed enough, because that's a reflection of their mental state. Their mental state is, we're young, we don't know much about anything. That's why we have to have an app that will tell us.
Yeah.
Yeah. And then they have other things like restaurants. So the same idea. How do we provide more business to local residents by somehow channeling students to these restaurants? And they try to. These are not high tech, of course. These are, and certainly not deep tech. But they're trying to use technology concepts and of course the smartphone application structure to create something that they think is entrepreneurial. But the problem is, what really should stop them from even beginning is, none of these problems are new. This is a problem that's been around forever. And what they really need to figure out is, why haven't previous attempts or current existing attempts, why don't they work? As opposed to saying, oh, let's start over, we'll do it our way, because we're really smart, we'll figure out a better way. And that, again, is a fatal flaw. But it points to what I was saying earlier. It's like the ego that you think you can do it better and you're smarter, and maybe you think the tools have changed. But it's an inward look. It's looking at the resource that we have in our minds and our startup team, as opposed to really understanding what the situation is. Why does this problem even exist? Not why do you perceive it as a problem, but why does the problem exist?
So I wonder, because a lot of startups, usually it starts with a CEO, a business guy, and then the second person they find is a CTO to build the product before they validate it. I'm wondering if the process should be shifted where you first find the product market fit or somebody who can help you validate the market before you even build it, because the CTO doesn't know what to build until you specify exactly how the house should be built, right? So it's a
Yeah, well,
process issue, right?
sure. Some of the smarter startups in Silicon Valley do work that way. But again, the majority here pretty much start with the technology. They're a
Mm,
group of technologists who would rather do this than go work for a company. And there's a whole angle to that. But no, typically, especially tech startups, start with a couple of engineers getting together. And it's only after they begin to encounter the challenges of fundraising that they begin to realize what a CEO type of person, what the business needs are. And it goes on and on. It's very challenging. But the ones that are more successful and the more mature, people with more mature mindset in terms of entrepreneurial team, start out more the way you described. Someone who really understands a market need, a market opportunity, and then pulls together the other resources. And
okay.
usually that market will also be CEO, because there's nothing, there's no particular background that makes someone more suitable as a CEO. Is it finance? No, not necessarily. Is it marketing? More likely than not. I think
Mm.
a lot of the technical founders who try to be CEO, it's very challenging because, again, their minds just don't work that way.
Yeah, they're
People
more
skill.
concerned about the thing, right? Than the people
Yeah.
using the thing. Yeah. Okay. Just now you mentioned most of your investments are like outside of America, and then you also have a lot of students that are coming from outside of America. Can you talk a little bit about that and how
Yeah.
they're different or
The companies in our accelerator program are typically not students anymore. They're
okay.
beyond that. They're older. I was referring more to the students in my classes, and we do have some younger entrepreneurs in our incubator part
Okay.
of our operation. And of course, we try to encourage all entrepreneurs because again, like we said, it's a process. Everybody has something to learn. But the fund, which is investing in the accelerator group of companies, as I said, it's a narrow window of the types of companies. They must have a certain level of maturity in order to already have some investment and be ready for serious investment. We can't
Mm.
say, oh, you don't have a CEO, you don't have anything, and how are you going to get investment in 6 months? And the answer is there's too much groundwork to cover before that. So the situation like that, we probably would not even accept into the accelerator. Our accelerator acceptance rate is also less than 1%. We
Mm.
had 2,100 applications, and we're only funding 18 companies in the
Ah,
current batch. So it's
okay.
very, very
Yeah, very, very competitive, right? So, what are some of the success cases that you've seen, like product market fit and also going to foreign markets, wherever, whether it's coming from Asia to North America or Europe coming to America or other situations?
yeah. That's a little harder for me to comment on because I don't tend to remember. I deal with so many companies, and I'm in any number of them in great depth. Um, the fact that everyone makes so much noise about so-called unicorns,
Mm.
companies that funding at valuations, usually private financing valuations over $1 billion. That doesn't mean much. There have been a slew of very high-profile companies that have gone bankrupt.
We work recently, right?
Yeah, WeWork is, to me, so transparent because I remember right from the beginning, everyone was making such a lot of noise over it, and I kept talking to my friends. I was saying, what's new here? This is a real estate play. Yeah, And of course, ultimately that was their downfall. They didn't understand that they were really in the real estate business. So they have a typical challenge with financing, which is trying to balance the needs of long-term capital for their kind of investment, and short-term capital, which you need for operating expenses. And because of that, it's not so much a product market fit. I think there was, due to a number of economic factors, it was a clever idea for the particular time, but it didn't have enough longevity. And of course, it had zero competitive advantage, meaning other people could offer the same kind of thing. So why would a company want to work just with WeWork as opposed to a competitor? There's just no particular advantage.
Wow.
I don't understand why so much money from very smart investors went into companies like that. And there are other examples. That wasn't fraudulent, not like Theranos, which was clearly fraudulent, but people just and there's a lot of that. And what happens when people get misguided is they mistake the vision and the energy, and usually a charismatic founder, instead of focusing on the fundamentals. So to me, investing with early stage companies is the fundamentals have to be really sound. And as you keep emphasizing, the idea of product market fit is literally the very, very first step, the most foundational concept that you could imagine. You don't get that right, what else are you trying to do? To spend 9 months just figuring that out, as opposed to, I want to build a prototype so I can show it to people, which is very often what happens. And with software or with an app, that's easy. Okay, so here's another example of a very specific situation. I think this was created by, a woman in France. And she wanted to create an app specifically directed at female travelers. And what she offer would be to connect female travelers with local guides in different cities. So let's say you, Elaine, wanted to go to Copenhagen in Denmark. You could go through her app and possibly be matched up with a number of candidate guides, and you as a woman might feel more secure because maybe the guide is also female, obviously somehow vetted to be safe, reliable type of person, as opposed to being a woman just randomly landing in a foreign country, no knowledge of the language, and either trying to do it on your own or participating in a commercial tour.
Okay.
Now, it's not a terrible idea, but how big is that market? How do you develop that market? How do you make that into a big business, which of course is also one of the fundamental assumptions of a venture capitalist. They're not going to invest in anything they don't see can scale into millions of users, at least large. But she was very convicted. She had a very strong idea, a very clear idea of what she was trying to do. And she, of course, got some initial traction, meaning, I don't know, couple dozen people trying it out. But it's not going to go anywhere. Of course, we didn't.
So remember, before COVID, it was all like about market size and how fast to grow and add revenue instead of actually making money from customers. Do you think COVID has changed that now?
COVID, what happened with COVID is pretty complicated, because on the one hand, one of the results, aside from people not traveling or people being physically out shopping or interacting and so on, the economy is just really plummeted. Everything just slowed down very dramatically. The way investors look for what they call traction, because it's one of the things that answers this question, what makes a startup investable? And standard answer is traction. And the what that usually means is a shorthand for show me revenue, show me you can have real customers paying you, so there's revenue, that's traction. Now that's fine, but if you happen to be, for example, a biotech company or a medical device company, first several years, there's no possibility of revenue. It just doesn't exist.
Right.
So what else constitutes traction? And I describe it as really any and all forms of third-party validation, right? Testimonials from experts, testimonials from beta users, testimonials from channel partners, or whoever, however you can get it. And of course, if you win prizes for your technology or you have patents on your technology, all of these are forms of third-party validation. You need to know how to present those as ways to inform investors that it's not just we say how great we are, other people in this ecosystem and our ecosystem, our field, other people acknowledge who we are. That's really a very important concept. Revenue is one thing, but for some projects, it's simply not possible. And you cannot just say, it's not possible, I don't know how people deal with that, because as an entrepreneur, you can't admit any particular roadblock is permanent, right? If it is, then you give up entirely. When there's a roadblock, you have to figure out a way around it. So if the roadblock is you're too young and it's not possible for you to have revenue, what else can you show to an investor that would encourage their interest or confirm their confidence in what you're doing?
So it's proving that there's support, right?
It's all about proving. And so I think what happened with the pandemic was it suddenly became much harder to get proof because people weren't interacting, people weren't in the market, business slowed down, everything slowed down. Of course, it was more difficult.
Wow.
Now, pandemic, there's still a consensus that investment rate has not picked up so much, maybe beginning to a little bit. Part of that is that investors are really a reactive lot. They're not proactive. So they react to economic changes, they react to what's going on in the startup world. Ironically, so there are typically two segments of the venture capital investment, call it portfolio, that don't slow down so much, even when times are tough. One is quite late stage, where they're raising large amounts of money. Let's call it 25, 50 million and up, and really early stage, where it's $1 million, 2 million. Where companies have the most challenging time is when they're certainly past the MVP, the minimal viable product. They've done their beta testing. They're beginning to get some customers, but they're not really quite ready to scale. So there's a uncertainty between beginning to sell and beginning to scale up. So what happens in between? And what happens, of course, is market development. It's about partners. It's about any kinds of license, whatever you need to do to get through there. But that stage of growth is particularly hard to fund because that's when there's so many questions. It's no longer the fundamental technical questions. There are questions about implementation or how it will work in the environment of the user. Will there be conflicts and so on? And of course, competition with other commercial offerings and so on, more regulatory issues. There's so many unknowns that you really have to deal with and resolve that don't necessarily result in revenue right away. So it becomes very challenging to get an investor to say, okay, we'll fund you to do those, because that's a different side of the type of strengths, the types of skills the team has to have. The early startup is really, again, foundational stuff, and if it's tech, then you want some exceptional techie people. After you scale, then when you're ready to scale, there are lots of people who are experienced in the industry who can do that. But call it a terrible, it's a teenage, tween age, it's difficult.
Yeah. So it's the first the first 10 yards of a marathon versus the long game, right? Like how often is it the same people, right? The people who are great at starting things versus the people who are good at scaling things, is it the same or not?
Okay, so that's a really important point. As a company grows from not only 0 to 1, 1 to 10 to 100, and so on, actually what is required of the human resources is different, is
Mm,
very different. Team members who are really good at the first stage, it's just, again, one set. And it's not necessarily the same set for every kind of project, but it's a certain type of mentality. And even a CEO who is really super in the first 2 or 3 years may or may not be good in that middle section, and probably is not good and doesn't enjoy managing a company with 2, 3, 400 employees. A guy who 10-person team that's all gung-ho and everybody's in one room is very different than having this big corporate structure.
yeah,
So yeah, that's also a challenge because sometimes the founders aren't willing to see that, aren't willing to evolve, and that means they have to learn. So I think this is a good place to wind up, in the sense that this is another foundational issue of entrepreneurship, that entrepreneurs must be totally passionate learners in a very broad sense, and never content to rest on your laurels. And using the analogy I talked about with academia, if you looked at the top 10 students in any class in university, you think these people are great learners. And they are. They're very efficient learners in the academic context. But are they really passionate learners in the broader sense? And often they're not, because for whatever reason. Again, it's not a criticism. But entrepreneurs have to be willing to continuously reinvent themselves all the time, to
right.
learn new things. Whichever side you come from, you want to learn about other things. It's not trying to become somehow omnipotent and good at everything. You will never be, most of us will never be good at everything. But if you are, we talked about this very specifically, if you are a technical person, an engineer, you absolutely must understand what marketing is all about. You may not want to do it, you may not be actually well suited at it, but you better understand it. And you better understand the finance as well. Okay, again, not to be a finance person or an accountant. It's not that level of skill, but just understanding, absolutely. And so a CEO is really challenged the most because they have to really understand everything that's going on.
Yeah.
Manage to keep everything going. So
Mm,
it's really about keeping the people, the corporate culture, that energy moving along in a positive way. That is a very specific kind of skill that's never taught anywhere.
yeah.
Certainly can be trained, but people have to have that as a drive and have some of the innate skills, again, people skills, to do that.
Yeah, keep everybody on the same ship and going the same direction, right? Okay, so one last thing is, so to summarize, what's one takeaway you like the audience to know about entrepreneurship and product market fit?
I think the statement about learning is most important. And maybe, again, a precondition to even that is having the courage to dedicate your life to something. And that doesn't mean forever. It just means that at any given time, you have a very clear sense of purpose, a sense of commitment for some indefinite period of time. You can't say, I'm going to be committed to this for 6 months and then I'm out of here. That's not what entrepreneurs do.
Yeah.
At some point, you may have to pivot, change direction, or you may have to give up. That's another issue. But you have to have that courage, and the courage of your convictions that what you are doing is meaningful, it's important, not just to yourself, but again, to the ecosystem, that you are really making a significant contribution. And it's not just about making money.
Mm,
It's okay to just make money, and you can be successful as an entrepreneur doing that. But I think it won't be nearly as rewarding in a
yeah.
personal sense. I don't think you will bring in, especially for a more sophisticated technology company, you will not bring in the kind of people that will help you build that kind of. If everyone you buy is basically a hired gun, then the big risk you run is someone else is going to pay them more money and they're gone. Right? That's the problem with money. They have to be motivated also by a sense of shared purpose, and that the sharing is what helps sustain everybody's courage. But that courage has to be foundational. It comes from the founder, it comes from the CEO, but everyone has to contribute to that, because it's like the old story, one bad apple will spoil the whole barrel. And you can't afford, in a startup, you can't afford to have those bad apples. You have to really continuously try to bring in only the best possible people that you can, who will share that commitment and do that with you.
Yeah, I've noticed that in the US, a lot of the great startups they're great at evangelizing. It's changed the world, right? It's never just about money. Otherwise, you go trade stocks in the market. Yeah.
The entrepreneurial life is truly challenging. It's worth it, but it's challenging, which means it's hard, and it's hard emotionally as well as physically.
Okay.
Don't be an entrepreneur. Just go sell stuff or buy and sell.
Right. Okay, great. Thank you so much, Pochi, for your time. How can people reach to you? What's the best way to find you?
Look for me on LinkedIn,
LinkedIn, okay.
And they can connect with me that way.
Okay. All right. Thanks for your time, Pochi. Okay.
I think a lot of the bad examples of entrepreneurship in China come from really short-term thinking, such as copying people's copyrights and brand. Of course, it's illegal, but aside from the illegality of it, of course, that's the easiest thing. You take something that is very successful that someone else has created, and you literally copy it, and you can sell it right away. So if it weren't for the legal aspect, and I'm not making a judgment on that, every country has a right to think about its own intellectual property. That's the rawest form of entrepreneurship, which says, I see an opportunity, meaning I see a market demand. I have an easy, quick way to bring in the resources I need, raw materials I need. I can produce it very quickly at low cost, and I can sell it, and I can make money. And the sooner the better. And that last statement is really what has been holding back investors, so-called venture capital investors or other investors in China and Asia. They're so accustomed to that when an entrepreneur presents a plan to an investor, that's the first thing they look for. Oh, 6 months, you haven't made any money? Forget you. Not so. Entrepreneurs, even the ones who are more ambitious technically or technologically, have a huge disincentive to try to create products that have long-term focus and may not have a result for a couple of years. That will not fly.